Hello everybody, this is an update for natural gas on 30th of August 2022, Elliott wave analysis and classic analysis. There's some evidence of an upcoming trend change, or at least this market is currently highly vulnerable to a trend change, and so I have two Elliott wave counts and then I'll go through weekly and daily charts for classic analysis. At the monthly chart level, my data begins back here in 2012, and I'm choosing to see this upward movement as the end of an impulse, and from this high to this low, this is really obviously a three-wave structure. It fits nicely as a zigzag. I'll see this as a supercycle degree second wave correction. When two ends, three begins, and so I'm expecting for natural gas that within supercycle 3, we're looking for the end now of cycle wave 1. Within cycle 1, within the final fifth wave at primary degree, if it's still underway, no second wave correction may move beyond its start below 5.327. That's the line in the sand for my two wave counts. Let's go through the main wave count first. And we're going to be looking at the end of this upward movement at the weekly chart level. Let's just go back here. We're going to look at all of this movement from this low here, the end I've labelled, the low I've labelled supercycle 2, this point down here. From this low to this high, this could be a 1, 2, 3, 4 and 5 still to continue. Primary wave 1, a leading expanding diagonal, 2, probably a single or multiple zigzag, 3, an impulse, 4, a triple zigzag, I have it labelled, and 5 underway. Within 5, no second wave correction may move beyond its start, below 5.327. This is my main Elliott wave count, only because we should always assume the trend remains the same until proven otherwise. While price remains above 5.327, we should assume that this upward trend remains intact. Let's take a look at the daily chart level with a high for 3. Is this point up here. From this high to this low, this downward movement can be seen in two ways. It can be seen as a single zigzag with an extension, or it can be seen as a triple zigzag, which actually has better proportion. So triple zigzags aren't rare structures, but they're really not very common either. But I think that this movement fits best as a triple zigzag, so that's how I'll label it. Note that each of W, Y, and Z themselves only subdivide ABC, simple corrective structures. That's because the maximum number of corrections in a multiple is 3, and so you cannot label any of W, Y and Z as multiples within multiples, because it multiplies the total beyond 3 and violates the Elliott wave rule. That is the most commonly ignored or misunderstood Elliott wave rule, and I use it as a simple litmus test for identifying if the work I'm looking at is worthy of time. If you see W, X, Y, X, Z overused and W, Y and Z labelled themselves as multiples, don't waste your time and move on. If 4 is over here, then 5 has begun. If 5 is continuing, then within it, intermediate 1 and 2 may be complete, and minor 1 and 2 may be completing. Minor 2 may be a little expanded flat, A, B, C. The target for C is for it to reach 1.618, the length of A, at 8.7326. Minor wave 2 may not move beyond the start of 1 below 7.542. If we see a new low below that point, this would invalidate this main wave count at the daily chart level and add some confidence to the alternate. At the weekly chart level, this is the alternate. Still seeing supercycle 2 over here. And now what if cycle 1 was over here? We'll subdivide quite nicely. Primary 1, 2, 3, 4, 5. If cycle 1 is over here, then cycle 2 may have begun, and it may be subdividing as an expanded flat. They're common corrective structures. They are labelled A, B, C, and they subdivide 3, 3, 5. Let's take a look at this at the daily chart level. Before we go there, cycle 2 may not move beyond the start of 1 below 1.598. At the daily chart level, here is the end of cycle wave 1 and the start of cycle 2, A, B, C, subdividing 3, 3, 5. Now this is how I can see this downward movement as a single zigzag, but we could very easily relabel this a triple zigzag for primary A, and this wave count would be absolutely valid, though I just want to show you there are two ways to label this downward movement. If A is a single zigzag, A, B and a long extended C wave, extended first, second, third, fourth, fifth, this is absolutely entirely possible. Either way of labelling is valid for this wave count. I think actually the triple zigzag has better proportion. I just wanted to show you there's more than one way to label it. Both are valid. If A is over there as a three-wave structure, whether it be a single or triple zigzag, then A ends here and B begins here. From this low to this high, it's possible B could be over as a double zigzag, W, X, Y. It's possible Y could be over here, but it could also be A, B, C. It could continue further. And so I have no upper invalidation point for primary wave B. It has to be accepted that it could continue higher. There is no rule stating a maximum length of B waves within flat corrections with an Elliott wave, but there is a convention that states that when wave B reaches twice the length of wave A, the idea that a flat correction is unfolding should be discarded based upon a very low probability. For this wave count, that idea would be discarded above 13.999, where B would reach twice the length with A. Unfortunately, that's quite a long way away, but that's the convention, and that's how we use Elliott wave rules and guidelines. If B is over here, then C should have begun. It would reach 1.618 the length of A at 3.011. And cycle 2 may not move beyond the start of 1, below 1.598. So those are the two wave counts. Which one does classic analysis offer more support to? At the weekly chart level, at this high, here's a gravestone doji candlestick. That's a bearish reversal pattern. It's coming in the context of RSI reaching overbought and exhibiting strong single bearish divergence, money flow index reaching overbought and exhibiting double bearish divergence, ADX indicating an very extreme upward trend here, an extreme upward trend here, and again an extreme upward trend for this movement. So, considering that context, a gravestone doji should be given weight. This offers support to the alternate Elliott wave count. Upward movement in recent weeks comes with some decline in volume, support for the alternate bearish Elliott wave count. On balance, volume is within a narrowed range. If we get a breakout of this range, it would be a signal, but really weak. Stochastics also overbought. ATR increasing as price moves higher, now starting to flatten off, so there's a little bit of weakness at the end of this movement. Again, that supports the bearish Elliott wave count. We see that a little bit more clearly at the daily chart level. ATR is now flat as price is moving overall higher. At the daily chart level, ADX indicates the upward trend is extreme, so it's extreme at both time frames. RSI for more recent movement, not RSI, money flow index reached overbought and then has exhibited bearish divergence. RSI, well, it has from back here, it's longer term, we've noted that on the weekly chart, but not for more shorter term. Given the context of an extreme upward trend, bearish divergence between price and money flow index, this extreme upward trend at both time frames, and now also a bearish candlestick pattern in this dark cloud cover at the daily chart level, this market must be understood to be highly vulnerable to a trend change. It doesn't have to happen here, but for the long side it would be extremely risky, and we have to accept that that bearish Elliott wave count actually has a reasonable amount of support from classic technical analysis. If we want to look for some bullish support, we may be seeing a little break above resistance from on-balance volume, and within most recent upward movement, it is upward sessions which exhibit strongest volume. So the picture isn't completely bearish. There is a little bit of bullishness here, but on balance, it's more bearish than bullish. That's all from me with natural gas for you, and I hope everyone had an awesome weekend.